Hi, everybody, and welcome to the new Wall Street News Network show. Today we're going to be talking about municipal bonds. Now, what is a municipal bond? A municipal bond, in the simplest terms, is a loan from the investor, in other words, a loan from you to a state or local government or government entity. Now, what am I talking about? I'm talking about a loan to New York City, a loan to California, a loan to the local Department of Water and Power, uh, a bridge toll agency, that type of thing, and these loans are referred to as a bond. Now, what happens with municipal bonds is that they mature after a certain period of time, and what that means is your investment is paid back in 1 year to 30 years. In addition, you are paid an interest rate, and that is called the coupon rate, the initial interest rate, which could be 2%, 3%, 4%, 5%, whatever the going rate is on munis of that type with that particular rating. Now, one of the things that people like about municipal bonds is the fact that they are exempt from federal taxation. The interest that is paid on them is exempt from taxation by the federal government. In addition, for most states, you can also exclude the income from your state income tax, like in California and New York. And in addition, you could have a triple tax-free situation with a living in New York City. You can avoid city income tax, state income tax, and federal income tax. So that's the primary reason why people like municipal bonds. Now, of course, municipal bonds are subject to interest rate risks. As interest rates go up, the bonds can drop in value. But at least you know that after a certain period of time at the maturity date, that those bonds will be paid off. Now, there are also closed-end funds and mutual funds that invest in municipal bonds, but the big disadvantage with those is that there is no maturity date. So if interest rates go up, you don't know if you're ever going to get your principal back. So that's one thing to keep in mind. However, one of the advantages of the closed-end funds or the mutual funds that invest in munis is the fact that they are liquid and you can reinvest your interest. So we're going to be covering a little bit more about municipal bonds in one of these later videos, but I wanted to cover the basics in this one. And if you are interested, I do have a book that I've written. It is called Get Tax-Free Income from Municipal Bonds, High Yield Tax Exempt Interest. And this bond sells for less than $10 on Amazon and far less than $10 if you want the ebook version of it. So until next time, thank you for watching.